Gold just hit $3,300 per ounce, hitting yet another all-time high, and in our opinion, we don't think it's going to be the last one if our views in our 2025 Gold Outlook report continue to prove accurate. But this moment leaves a lot of investors wondering whether to sell their gold, buy more gold and hope the rally continues, or is this just the beginning of a further bull run and they can just hold on and do nothing? Well, although we're bullish on gold prices, we think there's actually a better way that breaks that buy or sell or hold stalemate entirely. First though, let's explain where we see gold prices going in 2025 and why our outlook so far has predicted gold's major breakout rally in the first quarter. First off, gold did not go up. It's the dollar that went down. There's no such thing as a gold bull market without a dollar bear market. One is really just the inverse of the other. As we wrote in our 2025 Gold Outlook report, we are in a gold bull market today for a very different reason than in 2009 to 2011. It's not about the fear of rising consumer prices. It's not about the fear of inflation. It's about the fear of being a creditor to an increasingly obvious Ponzi scheme. That's the driver. Not CPI, not ETF flows, not even central bank buying, which of course we're keeping an eye on as well, but simply that people are losing trust in an irredeemable paper currency. Here's a graph of the price of the dollar measured in gold since 1996, from over 120 milligrams per gold to less than 10. Where's that bottom? Who knows? That's the dollar price in gold since 1996. Now let's talk about other things that are affecting gold and of course the value of the dollar. We have tariffs, we have tensions, and we have tightening. So Trump has volatile tariff policy, which is a constant threat for the equity markets, which of course wobbled under all that pressure. Here's how roughly $100,000 would have performed from January 1st in 2025 to March 31st of this year. Gold with a 4% annual yield came out to $119,630. The Dow Jones actually fell to $98,700, and the S&P 500 did even worse, going down to $95,770. So with major indicators pointing towards further room to fall for stocks, many investors are wondering, should I add more gold in anticipation of a bear market for equities and a bull market for gold? Meanwhile, the gold carry trade has surged. The gold basis, which we track, hit 6.8% in mid-January and then fell back to 4.5% even as gold prices rose. And that's not speculators betting on the further price of gold. That's market makers bidding up the price of metal, not futures. That is a bullish signal if there ever was one. But you have to ask yourself, does this feel like a top for gold? We've had no media gold rush, no euphoria, no retail mania in the West, just a quiet, relentless vid under the price of gold. So the top in gold crowd would really have to argue that gold is somehow becoming less relevant in a world where the dollar is being debased, sometimes quicker than ever, faster than GDP can grow, and the US debt trajectory itself continues to grow exponentially with no signs of slowing. Here's a graph of the cumulative total spending since Trump's inauguration compared with the same spending periods in 2023 and 2024. Notice any difference? I don't. Now let's address the gold investor's paradox, which is, hey, gold prices are high and you continue to want that exposure, but you're nervous to add more at current high prices, but also hesitant to sell in case the gold bull market continues. You're stuck. High prices are good, but also high prices are bad. This is the part where most financial advisors tell you, if you do have gold, I don't know, maybe just keep on holding it and do nothing. But that ignores one of the most interesting developments in gold investing in decades, which is you can earn a return on gold paid in more ounces of gold without giving up any ownership. At Monetary Metals, we're offering 4% interest on gold paid in gold through our secure jewelry lease program. It's real gold, financing real businesses, paying you a real yield denominated in more ounces of gold. It's the big solution to the do I buy gold or do I sell gold question. You own your gold, you earn a yield, your gold compounds over time, no dollars necessary. So why does this matter now? Rates on dollars are potentially coming down hard if there's an economic slowdown. Inflation, of course, continues to eat away at your returns. Gold is showing investors something that is very hard to find, very few can get, which is signal amongst investing noise. We don't think the rally in gold is over. If anything, we are just getting started. Our 2025 Gold Outlook report predicts a path for gold prices to reach $3,700 or even higher in this year, especially if the dollar continues to weaken and gold remains tariff-free. Whether you think gold is heading to $4,000 or more, or it's due for a pullback, the core problem remains that gold capital can be productive, not idle. Idle gold might preserve your wealth, but earning gold on top of gold, that's what builds it. If you're sitting on gold, the smartest move might be to put it to work. The old question of should I buy more gold, should I sell some of my gold, misses the point entirely when gold is a productive capital asset that can earn a yield on gold paid in gold. If you want to learn more about our price predictions for gold and how we've gotten this bull market predicted so well in Q1, check out our 2025 Gold Outlook report in the link in the description. And if you want to learn how to earn a yield on gold paid in gold, check out monetary-metals.com for more.